In my role as CEO of GrowThink, I get asked almost every day by both entrepreneurs and angel investors how the current economic climate is affecting angel investing. And I answer it with what the positives are and what the negatives are. So let's start with the negatives. The negatives are that psychology is incredibly important in investing in general, and particularly important when it comes to making illiquid investments in smaller private companies. If the general psychology is negative, investors' mindset toward risk is also pretty negative, and that negative mindset leads to more or less a stasis, just an extended period of diligence, basically a mindset of let's not take risk, let's batter down the hatches, and as a result, we've seen angel investing deal volume come down simply because of the psychology. Now, the second aspect is in terms of exits. That when you put money into an investment, certainly an angel investment, the idea is to get to an exit almost invariably via an M&A event or a public offering. If the sense that that M&A market and that public offering market are very unfavorable, it does trickle down to the angel investing market and make folks feel like the investment value proposition of investing in these kinds of deals isn't all that great. So those are the negatives. Now here are the positives. The first positive is, unlike investing in a public stock, where you can see in the price of the stock the effects of the current economic climate. You know, when jobs numbers come out that are negative, it affects the stock market as a whole. The overall financial and real estate crisis of the past year has really just battered stock prices across the board. So the positive is that angel investing, being illiquid investments, they don't suffer from that fluctuation in day-to-day price. And as importantly, because their exit strategies are 2, 3, 4 years out, that they can benefit from, really their exit strategy is not that impacted from the standpoint that we're dependent upon what that market, the M&A market and the IPO market is going to be 2, 3 years from now versus what it is today. And the second positive is that there are competing asset classes. So with the return expectation of almost every investment vehicle, whether it be interest-bearing savings accounts, whether it be the stock market, the Dow, the S&P, the NASDAQ, whether it be real estate, all of those classes are offering such a limited, in return potential for investors in this environment that, relatively speaking, angel investing looks more attractive. So there's positives and negatives. Really, to sum it all up, in the end, it comes down to what are the prospects for the underlying businesses. If the prospects for the underlying businesses are solid, then the angel investor should be looking at those micro factors for the most part to determine if they're investing if making an investment in these companies there's good value in doing so. For more angel investing trends and ideas, go to www.angelinvestingsecrets.com. Once again, that's www.angelinvestingsecrets.com.